right, let's dive in. Today we're tackling how to buy gold using Bitcoin.
Sounds pretty out there, right?
It might seem that way at first glance,
Yeah,
but that's exactly what we're going to unpack.
for sure.
We'll be looking at an article called How to Buy Gold with Bitcoin in 2025. Can these two really work together? What are the potential benefits?
Yeah, it's an intriguing concept. Many people see both Bitcoin and gold as, well, safe havens, reliable stores of value.
Okay.
Bitcoin has that decentralized digital edge. We all know about the potential for growth there.
Right.
And then there's gold with, centuries of history backing it up.
That tangible aspect, for sure.
Exactly.
So are we talking about diversifying a portfolio with, like, a make of the future and the past?
Exactly. The interesting thing is, statistically speaking, the prices of Bitcoin and gold don't really move together.
Oh, really?
Yeah, the research from Bauer and Hong back in 2021 actually showed almost no correlation between the two.
Huh.
So adding gold to, let's say, a Bitcoin-heavy portfolio could actually help smooth out those wild crypto swings we see.
That makes a lot of sense, actually.
Yeah.
It's not about them mirroring each other, but more about creating a kind of balance.
Right.
But how do you actually go about buying gold with Bitcoin?
Yeah.
The article lays out 5 main steps.
Okay, so step one is finding a trustworthy gold dealer, one who's willing to accept Bitcoin.
Makes sense.
This is where due diligence is super important.
Yeah.
Check online reviews, certifications, their security measures.
Right.
Really do your homework to make sure the dealer's legit, solid track record and all that.
So it's kind of like choosing a contractor, right? You wouldn't just pick the first name in the phone book.
Exactly. You want to be sure you're dealing with someone reputable.
Absolutely.
Once you've found a dealer you're comfortable with, step two is making sure you really understand all their terms and conditions.
All right, so what should we be looking for there?
Things like, what are their prices like? What are their delivery options?
Okay.
And critically, how do they handle refunds?
Right, that's important.
And of course, with Bitcoin's price fluctuating all the time, you have to pay close attention to the conversion rates and any fees they might have.
Yeah, that's a really good point.
Mhm.
It's easy to get caught up in the moment and forget those practical details,
Definitely. Now, for step three, you'll need to set up a Bitcoin wallet.
right? A wallet.
This is essentially your digital storage space for your Bitcoin.
So, like, different types of wallets.
Yeah.
How do I choose the right one?
There are a few options, each with its own pros and cons.
Okay.
You've got exchange wallets like Binance, convenient if you're already trading crypto on their platform.
Right.
But for more control over your Bitcoin, you might consider a self-custody wallet like Trust Wallet.
Trust wallet.
This gives you direct access to your private keys. Think of them like secret codes that prove you own your Bitcoin.
Ah, so it's like having the combination to your own safe.
Exactly. Control and security, those are the key things here.
Got it. Control and security.
Now, if you're dealing with a large amount of Bitcoin,
Okay.
you might want to look into a hardware wallet.
Hardware wallet.
These are physical devices that store your private keys offline.
Offline, huh?
Makes it much harder for hackers to get to your funds.
So like the Fort Knox of Bitcoin storage.
Exactly. That's a good way to put it.
All right, so we've found our dealer, checked their terms, and set up our secure Bitcoin wallet. What's next? What's the next move?
Step four is where the magic happens. Placing your order.
Okay, placing the order.
The article uses Binance as an example. You'd withdraw the required Bitcoin from your wallet, then carefully enter the seller's Bitcoin wallet address
Okay.
and confirm the transaction.
Confirm.
This is where it gets real because Bitcoin transactions are irreversible.
Oh, wow.
One wrong digit in that address and your Bitcoin could be gone.
That sounds a little nerve-wracking.
It definitely highlights how important accuracy is.
Yeah, for sure.
The article also mentions using QR code payments as a safer alternative to manually typing those long addresses.
Ah, that's smart.
And for those who value speed, there's the Lightning Network. It can potentially speed up transactions,
Oh, interesting.
like taking the express lane for your Bitcoin payments.
I like it. Okay, so you've placed your order, triple-checked everything, and the Bitcoin is on its way.
Right.
What's the final step? What happens then?
Step five is taking possession of your gold.
Okay.
The dealer will either offer physical delivery to your doorstep or storage in a secure vault.
Interesting.
This is where you need to think about your own comfort levels,
Right.
Do you want the peace of mind of having your gold physically in your possession? Or do you prefer the security of a professional vault?
Yeah, that's a big decision.
It is,
Probably comes down to personal preference and, well, how much gold we're talking about.
for sure.
But hold on a second. Is buying directly from a dealer the only way to get exposure to gold using Bitcoin? What about those Gold ETFs and tokenized gold. I've heard those terms thrown around.
You're right, there are other avenues to explore, and they might be particularly appealing if you're not so keen on the logistics of physical gold.
I think we need to unpack those options in the next part of our deep dive.
Yeah, definitely. Let's do that. Welcome back. So let's dig into those other ways you can tap into gold using Bitcoin.
All right, sounds good.
Especially if you're not keen on, physically owning it, things like gold ETFs and tokenized gold.
Yeah, managing and storing physical gold seems like a real hassle.
It can be, definitely.
Yeah.
And that's where these alternatives come in.
Okay.
Let's start with gold ETFs, those exchange-traded funds that track the price of gold.
Right.
You can actually buy these ETFs directly using Bitcoin on various crypto platforms.
So it sounds as easy as buying, like, Bitcoin on an exchange.
Pretty much, yeah.
Okay, but how do they actually work?
Imagine a big basket holding a bunch of assets, in this case, gold.
Okay, a basket of gold.
When you buy shares of a gold ETF, you're essentially buying a tiny piece of that basket.
Gotcha.
And the value of your shares goes up and down along with the price of gold.
Interesting. So I wouldn't actually own any physical gold,
Right.
but my investment would still reflect its value. So do I need a separate, like, brokerage account to buy these ETFs?
Nope, not at all.
Okay.
As long as the crypto exchange you're using offers gold ETFs, you can do it all in one place.
That's convenient.
Yeah, keeps things simple.
It does. But with so many different gold ETFs out there,
Right.
how do you pick the right one?
That's a great question. You'll want to look at a few key things.
Okay.
First, there's the expense ratio.
Expense ratio.
It's basically a small annual fee that the ETF provider charges.
So kind of like a management fee.
Exactly, for taking care of the gold behind the scenes.
Okay, makes sense.
Then there's trading volume,
Trading volume.
which tells you how easily you can buy and sell shares of the ETF.
Right.
Higher volume means more activity, generally easier trading.
So it's like checking the traffic on a highway. You want to avoid those congested routes.
Exactly, you got it.
Okay.
And of course, the reputation and track record of the ETF provider are super important.
Right.
You want a company with a solid history of managing assets responsibly.
Makes sense.
Remember those examples from the article, IAU, GLDM, SGOL, and IAUM?
Yeah.
Those are good starting points for your research.
All right. Gold ETFs are starting to make sense.
Good.
Now, what about that other option, tokenized gold? That one seems a bit more, I don't know, mysterious.
Think of it like this. Tokenized gold is basically a digital certificate of ownership for a specific amount of physical gold stored somewhere safe.
Okay.
These certificates, or tokens, exist on a blockchain similar to Bitcoin.
So instead of having a paper certificate,
Right.
you have a digital one that lives on a blockchain.
Exactly.
Does that make it safer?
In some ways, yes.
Okay.
Blockchain technology adds layers of security and transparency.
Correct.
Every transaction is recorded permanently and publicly on the blockchain, making it very difficult to tamper with.
Oh, okay.
Plus, it's super efficient. Transactions are usually much faster and cheaper compared to traditional ways of buying and selling gold.
Sounds like a modern, streamlined approach to gold ownership.
It is.
But what about actually using those tokens? Can I easily trade them for other cryptocurrencies or even cash them out?
The liquidity of gold tokens, meaning how easily you can buy and sell them, depends on the specific token and the exchange you're using.
I see.
But in general, tokenized gold is becoming more and more liquid as more platforms embrace it.
So kind of like a new language that's gaining popularity. The more people who speak it, the easier it is to communicate.
Exactly. That's a great analogy.
Okay, you mentioned a couple of examples earlier, Tether Gold, XAUT, and Alloy by Tether, AUSDT.
Yes,
What's the difference between those two?
good catch. They might sound similar, but they serve different purposes.
Okay.
Tether Gold, or XAUT, is a direct representation of physical gold ownership on a blockchain.
Yeah, okay.
Each token represents 1 troy fine ounce of gold held in reserve.
So if the price of gold goes up, the value of my XAUT tokens goes up too.
Precisely.
All right, that's pretty straightforward.
It is.
What about AUSD?
Alloy by Tether, or AUSDT, is a bit different.
Okay.
It's what's called a gold-backed stablecoin.
Stablecoin, what's that?
A stablecoin is a type of cryptocurrency designed to maintain a stable value, usually pegged to a real-world asset like the US dollar.
So with AUSDT, my investment is tied to the stability of gold, but pegged to the US dollar.
That's right.
What would be the advantage of choosing a stablecoin over a regular, like, tokenized gold option?
If you're looking for price stability, want to avoid the ups and downs of the gold market.
Right.
A stablecoin like AUSDT can be a good option.
Okay.
It's like having the best of both worlds, the security of gold and the stability of the US dollar.
I see. So if I'm more interested in tracking the fluctuations of the gold market directly, I'd go for XAUT.
Right.
But if I'm seeking a more stable asset,
Right.
AUSDT might be the better choice.
Exactly. But remember, research is key.
Always.
Before investing in any tokenized gold product, do your homework.
Oh.
Understand what's backing the token, the fees involved, and the overall ecosystem.
It sounds like due diligence is a recurring theme here.
It is, absolutely.
We've talked about buying physical gold, exploring gold ETFs, and now tokenized gold.
Right. But before we move on, do these alternative options come with any, unique risks?
They do. One of the biggest risks, especially with tokenized gold, is counterparty risk.
Counterparty risk.
What's that?
It's the risk associated with the platform or company that's issuing the tokens.
Ah, okay.
You need to be sure they're legitimate and their gold reserves are actually what they claim to be.
So it's similar to vetting a gold dealer, right?
Exactly. You want to make sure they're the real deal, not some fly-by-night operation.
Got it.
And remember, the world of crypto is constantly evolving.
Right.
Regulations are changing all the time.
So staying informed about those regulatory changes is crucial too.
It is, absolutely.
Okay, what about the security of these platforms?
Right.
We talked about hardware wallets for personal Bitcoin storage, but what about the platforms that handle these gold ETFs and tokenized gold?
Security is paramount when dealing with any online platform.
Yeah, for sure.
Look for platforms with strong security measures, like two-factor authentication, cold storage for their reserves, and a track record of resisting hacking attempts.
So it's about choosing a platform that prioritizes security and has a proven track record.
Exactly.
It seems like there's a lot to consider when it comes to buying gold with Bitcoin.
There is.
We've covered the steps involved in buying physical gold, exploring ETFs, and diving into the world of tokenized gold.
Right.
But I think there's one more crucial piece of the puzzle we need to address before wrapping this up.
You're talking about taxes, right?
Exactly. We touched on the tax implications of buying physical gold, but how do those apply to gold ETFs and tokenized gold?
That's where things can get a bit complicated.
Oh, no.
The tax treatment of these options can be even more complex than with physical gold.
So it's not a one-size-fits-all situation.
Definitely not.
Okay.
Different countries have different rules.
Right.
Some countries might treat gold ETFs just like regular stocks.
Okay.
Which means you'd likely be subject to capital gains tax.
Capital gains tax.
Others might categorize tokenized gold as a commodity, which has its own set of tax implications.
It sounds like navigating this tax landscape could be a real minefield.
It can be, yeah.
So what's the best approach here?
Honestly, the best advice I can give is to consult with a tax professional.
Okay.
Someone who specializes in cryptocurrency and alternative assets.
Makes sense.
They can help you understand the specific rules in your jurisdiction and ensure you're staying on the right side of the law.
All right, I think we've covered a lot of ground here.
We have.
From exploring gold ETFs to understanding tokenized gold and those tricky crypto taxes, we really delved into these alternative options for getting exposure to gold using Bitcoin.
Definitely.
But before we wrap up, I want to leave our listeners with a thought-provoking question. Welcome back to the Deep Dive. It's the final part of our exploration into buying gold with Bitcoin.
Back for more.
Always. We've covered the nuts and bolts, the alternatives, those potential pitfalls, and even those tricky tax implications.
A lot to take in.
It is, but now I kind of want to shift gears a bit.
Okay.
We've talked a lot about the how and the what.
Right.
But what about the why? Why are people drawn to these assets in the first place?
Yeah.
And what does that tell us about the bigger picture?
That's a great point. Beyond the mechanics and potential returns, there's often a deeper motivation behind these investment choices.
Right.
For some people, it's about, seeking stability, a hedge against uncertainty in those traditional financial systems.
I can see that.
For others, it's about embracing that decentralized nature of crypto, the potential for disruption.
Yeah, that makes sense.
Yeah.
I could see how those motivations could drive people towards, both gold and Bitcoin.
For sure.
Gold has that historical reputation as like a safe haven asset.
Yeah.
Something people turn to in times of economic turmoil.
Right.
And Bitcoin, with its independence from central banks and governments, appeals to those who are, skeptical of those traditional institutions.
Right. Exactly. It's fascinating how these two assets, despite their differences, can appeal to similar underlying motivations.
Yeah.
They both represent a form of financial independence,
Right.
a way to take control of your own wealth, protect it from forces you might not trust.
So it's not just about diversifying a portfolio, it's about diversifying your trust.
Exactly. Diversifying your trust. I like that.
That's a good way to put it.
It is.
But that brings up an interesting point. How do these motivations, this desire for alternative financial systems, how do they play into the future of finance?
Yeah.
Is this a sign of things to come?
It's definitely a trend worth watching.
Yeah.
That growing interest in assets like gold and Bitcoin,
Right.
it suggests a shift in how people think about, well, money and value.
I see that.
Reflects a desire for more transparency, more control, more options outside those traditional systems.
It's like people are looking for alternative routes on the financial map,
Yeah. Yeah,
exploring new ways to manage their wealth, participate in the global economy.
exactly. And as technology continues to evolve, new financial tools emerge, this trend is likely to accelerate.
It sounds like it.
It's an exciting time to be involved in this space, really.
It does sound exciting.
It is.
It'll be fascinating to see how it all unfolds.
Definitely.
Well, I think we've covered a ton of ground in this deep dive.
We have.
We went from, understanding the basics of buying gold with Bitcoin
Right.
to exploring those alternative investment options,
Yeah.
navigating those complexities of taxes, and even like pondering the implications for the future of finance.
It's been quite a journey.
It has.
Yeah.
And hopefully our listeners feel equipped to continue their own exploration, of this fascinating intersection of gold and Bitcoin.
I hope so too.
Absolutely. As with any investment, thorough research and careful consideration are, well, they're paramount.
Always, always.
But with the right knowledge and a healthy dose of curiosity, anyone can navigate this evolving landscape and, who knows, potentially unlock new opportunities.
Couldn't have said it better myself.
All right, so to our listeners, keep those curiosity engines running,
Yes.
stay informed, and most importantly, never stop exploring.
Couldn't agree more.
Until next time.